Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
Euro-dollar. A bullish opening white Mariboso yesterday and a third bullish white soldier after the previous session's second consecutive bullish closing white Mariboso. This was also a follow-on higher to last week's weekly key reversal up. It was the highest high since September 2021. The move up punched through and closed over four distinct resistances. The June 25 high at 118.29, the dark blue July 2008 to date downtrend currently at 118.32, the bright green May 2011 to date downtrend currently 118.42, and the June 2018 high at 118.51. Further above, we now have the 2025 high at 119.17, then the 2018 to date downtrend currently at 119.84, and the neckline extension to the April to May 2020 reverse head and shoulders pattern, currently 119.94. These last two really stopped the market's rise back in September last year, so I think they may be the better resistances. Overall, despite this strong move higher, the market remains within the mid-2025 based bright red shallow bull channel, which is currently 115.82 to 120.60. However, we could have a late November 2025 to date lopsided bullish halfway hesitation with the potential up to the 119.50 area. It is not a very clear pattern, but it does seem to fit the recent action. Finally, we are set up to achieve, with just this week to go, a monthly key reversal for January. Thus, if we close this Friday night either over 117.45 or under 115.95, then we'd be on. Anything in between will have a lesser outside month. Right now, we're looking at a monthly key reversal up. So far today, a try higher, but prices did not manage to reach yesterday's high and we've since come off, but just to sit above the four recently broken resistances that had been previously mentioned. Cable, aka sterling against the US dollar. A bullish opening white Mariboso and third bullish white soldier yesterday, after the previous session's significant bullish closing long white Mariboso. It was once again a new high and high close, one not seen since early July last year. Prices used the congestion band between 136.21 to 136.43 as a base for a move higher. Significantly within that congestion band lies the dark blue upper bear channel line, which is currently 136.27, part of a very shallow dark blue bear channel dating between early July to early August last year to date. Currently 130 even to 136.27. And the market made a second consecutive significant close over this dark blue upper bear channel line. We'll now see if prices can exploit this seemingly significant move higher. Below, we have a congestion between 135.16 to 135.55, as well as before that 135.81. Whilst overhead, apart from the September 2025 high at 137.26 and the earlier July high last year at 137.88, we have the bright green 2021 to date downtrend, currently 137.21. Now, this action since the double bottom seen in November last year is looking increasingly like a possible bullish halfway hesitation. If that is to be the case, then there is the opportunity for the market to move up to the 138.50 area overhead. More on this as it develops. So far today, well, staying in this fairly free area, prices have entered between that overhead bright green downtrend and the breached dark blue upper bear channel line and not willing really to do very much at the moment. US dollar against the Japanese yen. A gapping follow-on lower yesterday with a second bearish black crow after the previous session's huge combined key reversal down and bearish closing long black Mariposa. Prices pushed down through the mauve rising medium moving average, which is currently 153.87, and down to the next lesser Fibonacci line at 153.40, but reverted back up, failing to close below either. We are well and truly back within the bright red, broken, but perhaps still valid April to November 2025 bull channel. Overhead we have the June 1990 high at 155.78 and the late 2025 congestion band based around this level, as well as the now flatlining green short medium moving average, currently 156.43. In the process of moving lower, the market reached target X3, the target for the mid-January horn top. Now, for all these moves, we are set up now with less than a week to go for a monthly key reversal here for January. If we close either over 156.65 or under 156.15, we'll be on. Anything in between will have a lesser outside month. And right now we're looking at a monthly key reversal down. And so far today, a reactionary move back up from the support below, provided somewhat by the rising mauve medium moving average, though mainly staying within yesterday's true range. US dollar against the CNH, the offshore Chinese yuan. An indecisive doji cross yesterday after the previous session's combined bearish closing black Mariposa and bearish engulfing pattern. It was another new low, one not seen since May 2023. It was also contained, just about, within the small breached bright green bear channel, which is currently 690.33 to 694.90, formed since mid-December last year. Overhead, we have the September 2024 low at 696.90, whilst below we still have the bright red extension to the upper trend line, currently 693.03, of the May to August 2022 ascending triangle. After this we have the May 23 low at 689.53. I once again think that it may be time now to start talking about that 50% Fibonacci line below of the February 22 to April 25 move at 686.60. So far today, a reactionary move back up, though not by far, and not far enough to push up through that green, really push up through that green upper bear channel line, but we haven't really pushed up by much. US dollar against the Brazilian real. A possible hammer pattern yesterday that was also a bearish engulfing pattern, if only just on the latter. This after the previous session's indecisive spinning top that verged on being an indecisive doji cross. Prices dipped below the interesting 38.2% Fibonacci line of the October 2018 to December 2024 move at 527 even, part of a small but significant congestion band between 526.20 to 527 even, and even managed to dip below the whole band, but did not stay down there. This band actually is coincident right now with the important declining dark blue middle time, currently at 526.83 of the mid-December 24 to mid-April 25 bearish shift pitchfork. And we dip below this dark blue middle time. However, this pattern continues to be, this bearish shift pitchfork continues to be the showrunner for this market. Meanwhile overhead, well, we still have the combination of the mauve medium moving average, which is currently 538.20, and the flatlining green short medium moving average, currently 540.07. You could argue the action since late December might be a form of bearish halfway hesitation, but I find that a somewhat rarefied argument despite it appearing to be true. In which case you might look anyway down at the 522 even zone below as a likely outcome. US dollar against the Mexican peso. A long-tailed indecisive spinning top pattern yesterday with a new low, one not seen since June 2024. This after the previous session's bearish closing black Mariposa. It was also a second consecutive close below the small, dark blue, November 2025 to date based bear channel, which is currently 1740.96 to 1786.04. Now this is not too well defined a bear channel, but it's still there. We are actually in a fairly dead zone with not much support until the congestion between 1703.89 to 1709.23, made up from the April and March 2016 lows respectively. Below this is a further congestion at 1688.97 and the neckline extension to the January to May 2021 head and shoulders top, and that's currently at 1685.31. So far today, well, nothing much. We're either side of yesterday's close.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.